Good day, everyone, and welcome to Market Core here in IUX24, your trusted source for the latest moves shaping the global markets. I'm your host, John, guiding you through today's most important stories in business, finance, and investing. From tech valuations soaring to the shift in global bonds, from AI's trillion-dollar promises to evolving geopolitics, we got it all covered with our team of expert reporters. Let's dive right in. Guiding us through the week's biggest market moves, from tech and finance to crypto surge in Asia. Here's Christine V. Christine?
Thank you, John. Let's start with OpenAI, now valued at around $500 billion. At the same time, employee past and present are negotiating about $6 billion worth of stock sales to investors like SoftBank, Dragoner Investment Group, and Thor Capital. Still, CEO Sam Altman makes it clear, an IPO is not coming anytime soon. Wealthy Asian families are raising their cryptocurrency allocation up to 5%. A portfolio as Bitcoin hits record highs above $124,000 in this August 2025. At the same time, the family offices in Hong Kong, Singapore, and China are leading the shift, while the firm like Niche Digital Venture raises over $100 million in just a few months on the back of strong returns. Turning to fintech, US blockchain crowdfunding startup Legends has secured $5 million in a seed crowdfunding. The round was led by VanEck and Riven Howard Digital, with the participants from Coinbase, Crypto.com, Kakens, and Cyberfund, Blockchain Builders, and GSR. Legends plan to build a platform that enables startups to sell tokens directly to retail investors. A group traditional excluded from the IPO process. Last but definitely not least, investors are moving beyond ETFs into direct tokens and advanced strategies, as raising activities on Hong Kong and South Korea exchanges signals crypto moves into the mainstream.
Thank you, Christine. Fascinating to see how tech and fintech continues to fuel investor optimism, while crypto is carving its place in serious wealth strategies across Asia. Definitely a sector we keep tracking. Now, to the global macro picture. Surya, with worries over fiscal dominance and soaring AI spend but little profit, how do these trends shape today's risks and opportunities for investors?
That's a great question, John. On a global macroeconomics and policies, investors are warning about what they call fiscal dominance. This happens when governments raising debt pushes central banks to keep interest rates low. The concern is that it could weaken trust in major currencies and move more money into safe havens like gold. For traders, it means bond yields and currency stability are now very important to watch. Meanwhile, in technology and investment trends, the biggest tech companies like Google, Microsoft, Amazon, and Meta are planning to spend around $750 billion this year and next on artificial intelligence. But a new MIT study shows 95% of companies still see no profit from generative AI. This raises fears of a bubble that could burst before AI gives real productivity gains. So overall, investors are being careful with the global economy while also waiting to see if big spending on AI will really pay off in the future. Back to you, John.
Thanks, Surya. You showed the balance between depth and policy. And the trillion-dollar AI gamble for investors is about staying cautious but ready for game-changing shift. Bond markets have also been making headlines this week, shaping strategies for investors worldwide. For more on this, we turn to Ploy, who's been following the story closely. Ploy, what's happening in the global bond market right now?
Thank you, John. Global bond markets are showing sharp contrast and investors are watching closely. In the US, 10-year Treasury yields are holding near 4.3 ahead of Jerome Powell's highly anticipated speech at the Jackson Hole Symposium. Markets are weighing whether the Fed could signal upcoming rate cuts, a move that would boost bond prices. Over to Japan, long-term bond yields have jumped to their highest in decades, reflecting growing fiscal pressures. Thus drawing attention to Japan's massive debt load, but also offering higher potential returns on yen bonds. Meanwhile, emerging markets are seeing a wave of issuance. Countries like India, Brazil, and Mexico are raising capital at record pace. India in particular is benefiting from a recent sovereign rating upgrade, with spreads tightening to historic lows, making EM debt attractive for yield-hungry investors. Still, risks remain. In the US, commercial mortgage bonds tied to Manhattan Worldwide Plaza may face nearly $500 million in losses. A reminder that selectivity is crucial. So the picture is mixed. US yields rising on Fed uncertainty, Japan is under fiscal strain, and emerging markets booming. For investors, it's both a moment of caution and opportunity.
Thank you, Ploy, for a complex market landscape indeed, and one of the investors will be tracking closely. Finally, let's head over to geopolitics and trade. Manish, since the Chinese Foreign Minister's recent visit to India, can you share with us?
Thanks, John. Talking about India and China, they are improving their relationship after the 2020 border clash. China's Foreign Minister Wang Yi recently visited India, focusing on working together instead of competing each other. They agreed to restart direct flights and make business visas easier, helping trade and investments. Big Chinese companies like Vivo and Xiaomi will find it easier to do business in India after almost 5 years. Border trade points will also reopen as talks continues to solve their personal issues. Meanwhile, tensions with the US are rising. Donald Trump put tariff up to 50% on Indian goods. China opposes this US tariff, supports India, and calls the US action unfair. This shared problem is bringing India and China closer. In the last 5 years, India has imported many goods from the US. Because of the new US tariff policy, India is talking more with China about trade. If India trades more with China, many US companies could lose businesses or even go bankrupt. Since India is a big market for US companies, even America's coffee industry is at risk now. A report says that so far this year, 446 major US companies have gone bankrupt, which is 12% higher than the pandemic year of 2020. July 71 bankruptcies were the highest monthly number since July 2020. Experts warn the US needs to change its tariff policy or it could face a big recession. Many countries thinking about stopping businesses with the US because of these expensive tariffs. Indians now understand that America only thinks of itself first. That's why the Indian government and Indian businesses are ready for the new tariff rules without any fear. Over to you, John.
Thank you, Manish, for having the insight for our audience. I also believe globally people are expecting us to make the tariff policy more flexible and easier. That's all for today's Market Core. Big thanks to Christine, Surya, Ploy, and Manish for keeping us ahead of the curve. I'm John, and this has been a Market Core, where the market meets clarity. Until next time, stay informed, stay sharp, and always stay with IOX24.